Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into these sectors, looking for investment opportunities and sharing them with everyone in the community. We do have a coupon code special going on. It works on both the monthly and yearly memberships, and you can see what those discounts are in the description link below if you're interested in following me through this commodity bull market. Trenton Hughes says, is there a better solution than a 50-year mortgage? How about mortgage porting? It allows for you to transfer your current mortgage to another house. Everyone sitting around a 3% mortgage rate would finally start selling. What do you think? Well, um, I would be fine with that, but you do realize that the mortgage would then have value. There would be financial value tied to that low payment. So those that already possess a low mortgage payment, like the 3% or 2.5% or whatever it is, people would pay up for it. So they're going to have to pay up for the mortgage and the house. So if that were to go through, yeah, there's a ton of value for those that have low mortgage rates and a 30-year fixed rate low mortgage rate. So yeah, I'd be for it. If they want to do that, go for it. Silver breaks out for real now, says Silver Bottom Entries, and um, I've seen this pattern for a while, guys. I saw it back in 2018. That pattern of the cup and handle. I can specifically state in the mid 2010s. Um, Hubert Muhlman. Hubert Muhlman was a guy that I was following that was charting out a cup and handle pattern in the mid 2010s. Might have been like 2013, 2014, 2015, somewhere in that range. A little over 10 years ago to the fact. And I've been watching silver pattern for a long time. So what I've noticed is, I've been on Twitter now for a while, a couple of years since I started the channel. And I've noticed more so just human behavior. When I scroll through all these different tweets, so to speak, lots of people focused on the short term. I'm not talking about rock bottom entries. I'm just saying in general. When I scroll through Twitter, I see all these short term things. I see lots of technical analysis, people trying to predict price movements. They put the wiggles on the charts and all that stuff. And, when I look backwards, my shortcomings as an investor and the strategies that I was deploying or lacked thereof of strategies, lacking strategies, I just didn't hold stuff long enough. That was my biggest problem. And I would get scared out of positions too easily. So I needed a strategy or a framework to approach the markets. And that's when I came up with the three-pillar approach: ratios, market conditions, and technical analysis. The reason I came up with those three and not something else is because I couldn't figure out how to invest successfully without knowing where you're at in the cycle, without having any sort of I needed the data and my opinions to come directly from positioning in the market, which is technical analysis. The market cycle will tell you where you're at in the cycle and give you conviction to hold throughout the cycle. So you need to identify where you're at in the cycle. And technical analysis is the only way I could figure out how to do it. And then ratios was an unbiased way to tell if something was cheap or expensive when you compare an asset versus an asset compared to history. And then I go and I look at Twitter, and I don't see anyone giving information about how to become a better investor or really talking about successful strategies. The only strategy that I can find, and it did not come from Twitter and it did not really come from YouTube. The only successful strategy is to buy undervaluation, and that's where ratios come into play. That's the undervaluation part, and seeing where you're at in the cycle. If you're at the bottom of the cycle and everything's undervalued, well, that's when you buy. But you could tell this information to people. If you could flat out tell this information, you could say, look, these three companies are fantastic to purchase, and they still would not be successful. Why? Because they're not going to hold long enough. They won't have the conviction. They don't know where you're at in the cycle. They don't know how to invest. I believe Warren Buffett made the quote, the biggest risk is not knowing what you're doing. And that is completely true because no one teaches anyone how to do it. And even if they were to try, no one would be interested in learning. They just want people to tell them what to do, when to buy it, and then they won't have the conviction to hold on. They don't have a strategy or kind of like a compass to navigate the markets. So, yeah, I'm watching all this and I'm reading all these different tweets. I'm seeing a bunch of different charts and stuff like that. But you got to be able to decipher it. It's like reading code. And if you don't know how to read code, then there's no point in even reading it because it's all just gibberish anyway. So, yeah, silver breaks out for real now. I've been watching this from the mid 2010s, guys. I've put in the work. It's not like silver crept up on me. I mean, I've been a vulture sitting around silver and waiting for this to kind of play out. I know the 45-year cup and handle pattern is there, and we're going to break it. I know that interest rates are going up, and the unwillingness for the market to buy bonds, and these guys are panicking with these stable coins and trying to devise ways to generate cash flow and money flows into stable coins, which goes into the bond market. It's all just a big scam. I mean, that's what I would say, and a way to control people. So, yeah, I've been watching this for a long time, and the key trick here is to buy low and then to not sell. A lot of people say, well, how come you don't take profits? How come you don't swap to this other thing? Because every single transaction in a taxable account gets taxed. And I'm not saying that you shouldn't ever sell, but you have to make more returns to make up for the tax losses that you will encounter. And what you end up realizing after many years of investing is that if you're taking profits from all of your best companies and putting it towards, quote, better opportunities, that's the Peter Lynch quote. You're trimming the flowers and watering the weeds. Asymmetry is where you make all the money. And you don't want to trim the winners. In fact, you want to do quite the opposite. You want to take from the ones that haven't moved and keep piling into your winners. That's a better strategy, and people just don't realize it. Like they don't know any better. So it's the markets are very tough, and they're tough because it's like every move that you have to do needs to go counter to everything that you've learned. And what everyone learns in society and what you learn in school and elementary school and middle school and high school and fitting in with the crowd and then the teachers are teaching you how to become a part of society. And what I'm telling you is break all of it. It's so hard because you need to do absolutely opposite of everything you've learned for your entire life, and then be comfortable in doing so. And that's very difficult for most people to do. So I just wanted to add that to all this that I'm reading here. Anyone who told you market breadth was weakening last week never actually bothered to count, or they did and decide to lie to you about it. Here are some thoughts on the current state of the market. And what he's doing is he's just looking at all these different charts and he's adding up in a similar way that I do. How does the Dow Jones Industrial Average keep going up? And how's the Dow Jones Transportation Average looking like it wants to go higher? Does that scream recession? Could we be going up nominally because there's so much inflation? Yeah, that could be the case. So then you're going to have to price the Dow Jones in relationship to gold and other solid financial metrics like Dow Jones versus oil, Dow Jones versus copper, Dow Jones versus um, gold. And people are going to say, why are you comparing these things? As an investor, if you make more cash, more money, more currency, and you can only buy less of everything else, then what the heck's the point of it all? So if you invest in the S&P 500, you put money in it, $100, you put $100 in, it goes up nominally, and after paying taxes over a 10-year period, and at the end of the 10-year period, all you can purchase in today's dollars is $75, even though it went to 150 or 200. What's the whole point of it? The whole point, if you're investing, is to purchase more in the future, have greater purchasing power and more options than what you have today. And that goes back to some of the things that I talked about with the 50-year mortgage and buying a house, locking in your costs, because the surest thing in the market that I can tell in history is that the dollar will go down in value. That is probably the surest thing. It's harder to speculate in the markets and get things right necessarily than it is to speculate on the dollar and say, well, the value of this dollar will go down. And over a 30-year period, I am very confident that the dollar will be less in purchasing power in 30 years than it is today. So I kind of see that as almost like a sure bet. So I take that bet. I'm like, okay, I'll lock in my costs. I'll use the loan of the money today and use the full purchasing power of that loan and pay it back with a depreciating currency. That's one thing I can do. And then you can go and you speculate and buy assets and try to buy them cheap. And there's all these things that you have to be informed on and learn to be a good investor, to actually get returns that return purchasing power returns after taxes. So he's doing the same thing I do. I look around at all these different charts. I piece together what the market condition looks like, and then make opinions and decisions from there. It says, who is losing more, their consumers or their shareholders? And this is Comcast Corporation. And some people are talking about technical analysis, right? So this is a shoulder, head, shoulder topping pattern. And we're breaking through this support level. And I'm very sure that Comcast will probably lose money. I've got people coming to my door nonstop with all these options of fiber going in, and how Comcast shares their bandwidth in series versus the fiber, which is in parallel, and you don't lose bandwidth. That's what they're selling. I'm pretty sure they're losing a bunch of customers as people walk around and try to sell, of different companies. I've gotten 5 or 6 times that people have tried to sell me things over the past 2 years. So yeah, I'm pretty sure that this is probably going to head lower. A shoulder head shoulder topping pattern is valid at the end of a trend. So what you want to do is you want to get in there, and this is what he's looking at. What he did is he put this like this, and then he said that this is a shoulder, a head, and a shoulder topping pattern. That does look pretty nasty. It really does. And this here could be wave 4, the top of wave 3. Let's go on log just to see what this looks like. And so there's your bottoming pattern there. It's like a shoulder, a head, and a shoulder back in the 70s. Big move higher. We had a big consolidation, and then all the way up. This entire move is in a declining interest rate environment. Where people get wrong is they don't know the market cycle. The cycle that I'm looking at Comcast through is through the declining interest rate environment. So what they're going to do is they're going to look at things like this, zoomed in, and then they're going to throw a guy there, and they'll say, well, this is a shoulder, a head, and a shoulder topping pattern we've broken down here on the neckline. And this is your ultimate bottom here, shoulder, head, shoulder, and then the breakout. And this move was being helped with money flows coming into it, and then obviously the business did well too. It's a function of being in the right place at the right time and in the right sector. But I do think that could be a shoulder, head, shoulder topping pattern. Why? Because they have a lot of competition and interest rates are going to start moving higher. We've broken the downtrend. So they had tailwinds this entire time here, and now they're going to have headwinds, and that could come under pressure. And I'm not stating that Comcast will 100% be topping, but I would be looking at it as such. So you have to sprinkle in more than just technical analysis, because then what people are going to do is they're going to say that you're going to get these topping patterns too early. And they're going to say that in, say, something like uranium. Let me do URA. They're going to say, well, uranium, in my opinion, we're in this is the bottoming of like the 1977 and 78 and 79 in Comcast. This is the bottom here in those years, and this is going to go into a very big, very long bull market. And that's the market cycle. The down cycle was interest rates bottoming here, and then the up cycle is going to be bigger than what most will imagine. And it's going to be longer too. But some people are going to look at this and they're going to say that's a shoulder, a head, and a shoulder, and that this is going to come back down. What they don't realize is they're not tying in market conditions in the cycles. So what I was saying is no. We are early in this, guys. This is going to be wave 1, wave 2, and we're entering wave 3 for a big move. And that's me tying in more than just technicals. And the ratios too. So when I'm looking and I'm scrolling through Twitter and I'm seeing all these things, no one's tying this all together. And it makes it difficult for people to realize what's going on. It took me a long time to figure it all out. Now, no one sat down and explained this to me. I figured it out by myself. And I said, okay, I got to tie this here. I got to do this. What information? What do I get from the given? Given information is what we use in engineering. And then you figure out and solve complex problems. And then I'm starting to use charts to aggregate what the positioning is in the market, because that's really all that matters. Here's oil. It says lower break, didn't see a sell follow through. Low was slight below 59 and recovered good. And he's got like a inverted shoulder head shoulder pattern perhaps. I just look at things from a big picture view. Oil's going to go higher. I don't care what it does in the short term. Everyone's going to say I'm either right or wrong based off price movement in the short term. To become a great investor, you need to separate price and the market cycle value. So people can look at these things and they look at it and they'll say, uranium breaks out in crude oil, like crude oil is not going to follow uranium. Give me a break. You look at this, and these are all cycles. Up cycle. So this is a down cycle here. This is an up cycle here. This is a down cycle. And then we're in an up cycle. We're in the upcycle, and people don't realize we're in the upcycle. That's why I say we're in a super cycle. But they look at the price and they'll say, well, it's down. And I'm not going to dispute that it's not down. What I'm disputing is that it's not bearish. That is why you've got ConocoPhillips sitting on top of the structure. This is a breakout retest. That's a bull market. And that's that difference in approach and mindset is where I'm going to make the money. And they are not. That sole difference. The understanding of the market cycle. And me aggregating up the positioning and where we are positioned in relationship to the consolidation. Then that flows into my take on like emerging markets and all this other stuff. The consolidation, then the breakout will come. And that's where I focus my efforts. Now, I don't see this type of analysis really on Twitter from a lot of people. Everyone looks so close. Like this is a very zoomed in picture. And yes, we could go out here and chop sideways for a little bit before breaking higher in say 2026. But you should be looking for opportunities, as opportunities are already behind you for buying the bottom. The bottom was April of 2025. Coming down, it says, I love volatility. Human nature hasn't changed a lot in 25,000 years. Some event will come out of left field and the market will go down. Volatility will occur. That presents a great opportunity. And that's what you have to prepare for if you want to try to buy these bottoms with fear present. You need to be prepared with cash to do it. So, is there a general rule of thumb? Is it 10% cash, 20% cash? I don't know. And I don't know if there's a great answer for that. And I don't think you can search and read it in a book. Um, it's kind of like if a great opportunity came, are you prepared to take advantage of it? Now, if you've got cash today, and let's say you're at 5% cash, and you have a great opportunity show up, do you jump on it? Or do you sit and say there to yourself, well, no, I need to build a cash level up to 10% or 20%? I would say take the opportunity if it's a great opportunity, because opportunities don't come frequently. But the better you are at hunting opportunities, does that mean that you're going to have less cash? I would tend to say yes, that's probably the case. Because if the better you are at hunting opportunities, you're not going to be building up a whole bunch of cash. So I think this is the difficult part because I study Munger, I study Lynch, I study Howard Marks, I study all these guys. It's like, just how good are they? How good are they at identifying opportunities? And I've read about their success rates, which were very low. As weird as it is, their success rates were very low, and they were very conservative in their approach. So you kind of have to pair that all off on really scrutinizing their approach against my approach and the strategies they deploy and the strategies that I deploy, and where we're at in market cycles and stuff like that. So I'm digging deep. I'm trying to figure out what the best strategies and approaches are. Is it better to give a little bit of upside for a better probability of success? How successful am I myself at identifying higher risk companies and my approaches and my success rates and sharing higher risk companies with everyone in the community to make sure that I'm giving them an ample opportunity to be successful of just putting things in front of their face. So I'm always looking at that. Brady says the 43-year pattern is now broken out as expected. Been saying that the inflationary 70s will repeat and most probably be dwarfed hugely. Gold is a safe haven and copper is an industrial metal that usually does well in good economic conditions. Dr. Copper. This chart below means rough times are coming and that gold will soar. Posted the 3.5 years ago and linked post below when price was at the bottom of the right shoulder. So he's got this big 1970s inflationary move. Shoulder, head, shoulder is what he's got in a potential breakout. I look at this a little bit different. I do. I look at this from copper divided by gold because sometimes, as Munger would say, always invert. So what he's saying is that this is like a shoulder, a head, and a shoulder, and that this is going to break to the downside, and that we came up like this. So that's the chart that he is presenting. Well, what if this is a falling wedge, and that we're at a potential low point, and that this is going to break higher? Why can't that happen? Why isn't this a falling wedge coming into a corner and we get a break to the upside? Now, I go look and I look at the supply demand characteristics of copper. I don't think there's a chance at all that we will produce an oversupply of copper over the next 10 years. Like, I really think that there's a very small chance that we're going to come up with a supply glut. A very, very, very small chance. And gold is also, I think, in a similar situation, but it works in a different market condition. So really, what market condition is coming is really the answer. Because I'm pretty confident that copper is going to break higher um, and move on up when you look at the copper chart itself. So I'm in the camp that I think that we're going to do this. He's in the camp that that it's going to break lower. I think that we're going to get an upswing in the economy, and I think copper is going to be short. That's ultimately what it comes down to. And I think that copper is going to break out of this pattern here and rip. I mean, rip. And I don't see gold outperforming it. So I'm a little bit stuck with his opinion against mine. I'm not saying, I'm not looking for consensus. That's going to be my opinion no matter what. I think this is going to rip higher. A lot of the equities are poised to do that. And in the world that is coming with energy, I don't see how copper is going to go down. So we'll see how it plays out. I'm not saying that I'm right. I'm just saying that I'm a big copper bull over the next 5 to 10 years. And I see copper going double, triple, quadruple in price. And I see people ripping out copper pipes out of homes even. Like that's how bad it's going to get. So there's a difference in opinion there. It says, when I hear the classic contrarian sayings like buy low, sell high, be a contrarian, buy when there's blood in the streets, be greedy when others are fearful. Then I think about this commodities versus general equities chart. Commodities are extremely undervalued versus the stock market. A historical opportunity is underway in the form of a global paradigm shift away from overvalued paper assets towards undervalued hard assets. It will be the largest global financial paradigm shift the world has ever seen, and therefore one of the biggest opportunities there's ever been. The push narrative is that big inflation is done, and in his opinion, it is no, it is not by a mile, unfortunately. The commodities bull market started 5.5 years ago, which we caught the start of. The biggest opportunity in our lifetime and threat. Commodities versus US stock market, the big move higher. Gold's going to go up. Silver's going to go up. Copper's going to go up. Who's going to be the best? I don't know. If I were to make a guess, silver, platinum, copper, they're all going to do very, very well. Uranium and energy, they're all going to do incredible things. So rather than me trying to guess which one will do the best, I have exposure to each of those sectors, all of them. And I'm going to play this thing like a pro. I'm going to sit through it and ride through it and not accumulate a bunch of tax receipts. selling every single year. I'm going to ride this whole thing. So it's coming. There's the chart in front of you. We are at 100 plus year lows in the commodity to stock ratio going all the way back to the 1800s. So this is it. What are you going to do? What are you going to do and how are you going to position for this bull market? Are you going to be patient enough throughout your life to take advantage of it? Because this is going to be multi-decades, I think. It's not going to happen in a year or two. This is going to be a decade to 2 decades to 3 decades. Some people ask me, how come you're not selling and taking profits? Don't want the taxes, don't want to lose the position. If you sell and buy something else, and if you have big gains, you have to pay a lot in taxes. We're at the beginning of this bull market, guys. There it is. Look at it. You're telling me to sell at the beginning? Why? Well, you're up 4, 5, 6, 700%. You're up a 10 bag. Some of the companies we're in. Well, they keep going. Pigs get slaughtered, right? Well, not when you're this undervalued. Pigs don't get slaughtered if you know the game. You're not a pig if you know the game. It may look like you're getting slaughtered in the short term. What is the long term going to do? You know, everybody made all those billions of dollars. They held their stock in the company that they were running. They held it for a very long time. That's how you make the money. It's not buying and selling and flipping and doing all this crap. So anyway, that's where I'm going to end it, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special is the coupon code. And that's all I've got. So we'll catch you next time, guys. See ya.